Hello friends, in this video we would discuss and understand the industry standard which was issued by the Industry Standard Forum for seeking the RPT transactions approval. Uh, Specifically, or I would say these standards define or explain the minimum information to be placed before the audit committee or the shareholder to seek related party transaction. These standards are applicable for the listed entity and the effective date of implementation is September 1, 2025. And in this video, I restrict my discussion only to the few of the ambiguities and the practical difficulties. For the detailed reading, you can refer the industry note for the compliance purpose. So let's start the discussion. So what are these new standard? As we all know, these new standard or the framework is more about the transparency and the governance. And the goal is to standardize the information which is placed before the audit committee and the shareholder to seek the approval. And this and the purpose, or I would say the expectation of the regulator is that the more informed and the robust decision making process can happen in the listed entity. If I would summarize this industry standard for the related party transaction approval, so the disclosure are divided into three parts. So they divided all the RPTs, or I would say there are certain buckets that what kind of information to be placed before the relevant authority, which is audit committee and the shareholder. So they define like this. So part A, which cover all the RPT, which means that these kind of information needs to be placed irrespective of the size of the transactions or the nature of transaction. These are quite basic information about the related party where you have to give the basic details to the audit committee or the shareholder. Now the part B is only for the specific RPT. So whatever be the information requires under part B of this standards are applicable only these seven types of specific transaction trigger, which include the loan, guarantee, sale of assets, and the royalty payments. And the last category is material RPT. So if the RPT is a material one, then it requires higher level of disclosure, requiring more sensitive financial data like credit rating and the history of the related party as well. So this is a more, I would say, the summary version of this industry standard for the RPT. Let's understand the key changes for the management. So there is increased responsibility and accountability on the part of the management. And if I call out the specific pointers, so this this standard introduced CEO, CFO certifications, which confirm that the proposed RPT is in the best interest of the company and the management, while giving the details to the audit committee, must keep in mind that all the information provided must be in the exact format laid out in these standards. And for the material RPTs, the notice to the shareholder must include nearly all the information which is given to the audit committee. Now we will discuss about the practical difficulties. So first, as you can see, it is, and we all are discussing in the industry that there is so much of information dependency on the other party. So getting data from the related party is really a difficult task, especially when the related parties are private and uncooperative, and they can definitely refuse it to share it because it includes the sensitive information or quite confidential like credit rating. And suppose if there is a poor credit rating and there is a history of loan default, why related party would disclose it to you? And the second would be in terms of the financial. So if the entity is not your subsidiary and or I would say not wholly owned subsidiary and it's simply a related party as per the definition, then taking the financial figure could be a very difficult task because it's a confidential business information and they would be reluctant to share these kind of information. So from the implementation point of view, sometimes the listed entity find it impossible to fully comply with this standard. And let's hope how the SEBI or the regulator would see such kind of dichotomy in the information. So the practical difficulty two, which is specific to the royalty. So if you are making a payment with respect to the royalty, there is a peer comparison provision. So the requirement is that the listed entity must compare its royalty fees or the royalty rates with at least three suitable relevant industry peer. Now the problem would be finding this peer quite be difficult, and this would be a very subjective exercise. And even if you find the peer, to take this single transaction approval, that this would be a quite time consuming exercise and would be very subjective to seek this single approval, and there cannot be apple to apple comparison, so there has to be a detailed justification. Sometimes if you are going to a shareholder, not all the shareholder are financially literate and can understand these kind of nuances, and it would be difficult to justify why the comparison is being made to a particular player and not to the other. And this, the time will tell, like how to comply with this kind of information. And the practical difficulty three, and I would say more on the senior management part, is so there is a provision wherein you can share, or the listed entity can share the redacted information. And when it can happen, if the information is about the commercial secret, so they can redact, but there has to be a confirmation from the management or the board side that the remaining information is sufficient for the decision making. Now again, this is a very judgmental call which carries the legal risk. If one may question that the information shared is not sufficient, then you cannot. Now the question is, can the board judgment can be questioned legally? Again, this only the time will tell, like how these kind of call will be taken by the board of the listed entity, and there would be no doubt the personal liability for the board and the senior management. So the key takeaway and the next step would be, you have to prepare before the 1st September 2025. Key takeaway would be that no doubt there is a compliance burden for the RPT disclosure. So you have to increase your team. This is a very detailed, transparent, the well-justified disclosure. There is a little chance that the proxy advisor can question the quality of the disclosure, and there is a much more personal accountability on CEO, CFO part, and board as well. Your immediate action should be to educate your board and the management that what kind of information is required to present before the audit committee, so that this exercise can be completed, or information gathering exercise can be completed in time. You have to update your RPT policy to align with this industry standard, and you have to develop a detailed checklist so that no information can be missed as per this standard. Thank you for watching this video. I hope it clarifies some of the doubts, and if you have any question, you can write in the comment box. We can discuss, and or if I get a time, so I can create a video on those problem and the query. Thank you so much.